Good morning, and welcome to today's financial market update. Last night, the three major U.S. stock indexes closed mixed, but the signals beneath the surface were highly divergent. The Nasdaq finished at 25,837.21, essentially flat. The S&P 500 closed at 7,509.20, also barely changed. The Dow Jones ended at 52,224.64 with minimal movement. But don't let the calm appearance fool you. There is plenty of action underneath. Pre-market futures are already pointing to a weaker open. Nasdaq futures are down 0.46%, S&P futures down 0.24%, and Dow futures down 0.12%. This sets a cautious tone for today. Among key individual stocks, Nvidia managed to eke out a gain of 0.46%, but Tesla fell 0.15% and MicroStrategy dropped 0.2%, continuing their weak performance. Now, let's talk about the significant moves we verified. Several AI supply chain stocks saw dramatic swings during Asian trading hours. First up, Air Test Systems surged more than 27% over 2 days. The catalyst was their post-market earnings report on July 20. Results beat expectations, and they raised full-year guidance. The core logic here is surging demand for CoWoS advanced packaging testing. This confirms that AI hardware investment is shifting from selling shovels to addressing process bottlenecks. But be careful. The stock is now at elevated levels, and chasing it carries significant risk. Next, Cerebras Systems jumped nearly 18% over 2 days. The company announced a multi-billion-dollar AI chip purchase with a major sovereign wealth fund. This is a direct signal that demand for customized AI chips continues to explode. However, this move is driven by short-term sentiment, and we need to see the contract details materialize. Nebius Group also rallied nearly 19%. Market sources say its European AI cloud platform secured a computing services contract from a major tech company. This suggests the European AI computing rental market is starting to scale up. The logic seems solid, but we need to watch whether the contract value is being exaggerated. There is also an interesting arbitrage opportunity involving ARM and SoftBank. ARM surged 22% yesterday, but its majority shareholder SoftBank only rose 2.18%. The discount has widened to an extreme of about 45%. This creates a standard time lag arbitrage opportunity, but be aware that the discount could narrow quickly as arbitrageurs pile in. On the technical side, the VIX Volatility Index closed at 17.34, well within the normal 15 to 25 range. No panic signals there. However, the 10-year Treasury yield rose to 4.64%. This reflects the market digesting economic resilience and potential supply pressures, which puts pressure on growth stock valuations. Now let's look at the global macro picture. WTI crude oil surged 2.27% to close at $87.32 a barrel. This is one of the most important macro signals today. The drivers include OPEC Plus hinting at further production cuts and API data showing a significant drop in U.S. crude inventories. This oil price jump raises inflation expectations. It is a direct positive for energy stocks, but it is negative for cost-sensitive industries like airlines and chemicals. Interestingly, gold fell slightly despite the oil-driven inflation expectations. This suggests the market currently favors assets tied to real economic recovery like energy, rather than pure assets. Turning to China, the onshore yuan is trading at 6.76 against the dollar, while the offshore rate is at 6.77. The currency is oscillating in a narrow range with no clear trend of appreciation or depreciation. This provides a relatively stable external environment for northbound capital flows into A shares. On the trade front, the U.S. Trade Representative has extended tariff exemptions on some Chinese goods through the end of 2026. This covers electronic components, industrial chemicals, and medical equipment. It is a marginal positive, especially for export-oriented companies benefiting from the exemptions, but the market has largely priced this in. For A shares today, we expect a flat to slightly lower open. The Shanghai Composite may oscillate with support from heavyweight sectors like energy and utilities. The Chi-Next board, which plunged over 3% yesterday, may see some technical, but the rebound strength depends on whether AI and tech stocks can stabilize. The main themes today are, first, AI domestic substitution and advanced packaging testing. Air Test Systems earnings confirmed that advanced packaging is the most certain industry bottleneck right now. Second, the energy sector. The surge in crude oil is a clear catalyst, and together with the defensive nature of utilities, these two sectors should act as anchors for the market today. As for risks, avoid stocks with high short interest and deteriorating fundamentals. For example, Coherent shows relative weakness of -21% with high short interest and insider selling. Akoustis Technologies has an extremely high short interest of nearly 78%. These stocks carry significant short-term risk. Also, be cautious with traditional semiconductor equipment stocks, as the impact of the ASML export restrictions has not fully played out. Based on our system, we have a few actionable trading clues today, but all under the discipline of small positions in a corrective market. For Air Test Systems, if it pulls back to the $95 to $97 range and stabilizes, a small long position could be considered. The stop loss is at $93. For the Japanese indium phosphide substrate stock 5802.T, it remains relatively resilient above its 200-day moving average, supported by the domestic substitution theme. Hold but do not add. And for Coherent, the recommendation is to cut losses and avoid any rebound attempts. The stock needs to reclaim its 10-day moving average with volume before reconsidering. To summarize today's probability assessment, we see a 25% chance of an up day, 45% chance of consolidation, and a 30% chance of a down day. The core strategy is to focus on structural plays in energy and new AI narratives while staying cautious on growth stocks pressured by rising rates. Thank you for watching, and as always, invest wisely.